All right. Good afternoon, everybody. Let me just make sure the market is closed. Yes, it is 4:37. So I just want to talk about this Tesla trade. And I get all these emails like, "Oh, Mark, you make these great calls. How do you do it? Blah blah blah." And the answer is, I really don't. I just watch the market, and I let the market tell me what to do. I mean, this was one of the easier trades I remember. I mean, this has been the easiest, easiest trade since Roaring Kitty. Here's some trading advice, right? If Roaring Kitty pumps something, wait about 10 minutes till after the market opens and just buy puts. All right. Anyway, so why did I think that this was going to reverse? Well, a couple of reasons. First of all, it was massively overbought. I mean, look how overbought the RSI indicator got. There's a lot of different ways to measure momentum. And you got to understand, none of them are perfect. I recommend you pick like two or three momentum indicators and kind of really become proficient with them and understand the nuances and so forth. I mean, if you look at these momentum indicators here in trading view, I mean, there's what, a couple hundred, and 90% of them are different ways of measuring the same thing. So anyway, price action always takes precedence. But what this is telling us is that the stock was just basically jacked up to beyond what would be its normal or typical trading range. Most things have a normal or typical trading range, hence the name normal or typical. If we get above that, we call it overbought. This is what happens when buyers are really emotional and really aggressive. Now, why is this important? Well, if something gets above the range that it usually trades in, people are going to come into the market as sellers because they're going to be expecting a reversion or anticipating a reversion. A lot of strategies are built on this concept of reversion to the mean. It's very popular on Wall Street. And you know what? I don't care where Tesla's going to be in 5 years, 10 years. No one knows. All right. I don't know about their sales. I don't know about this or that, but I know about charting. And we're looking at psychology here. So now the other thing that was important is what happened. We got to this level that had been resistance before. All right. There tends to be resistance at levels that were resistance before. There's a reason for that. There are people who bought the stock at the top only to watch it like basically collapse right after they bought it. And a lot of them are like, "Oh man, I made such a big mistake. I shouldn't have done this. If this ever gets back up to my price and I can get out at break even, I'm going to." So remorseful buyers from here placing sell orders here creates resistance over here. Same thing. Remorseful buyers from here placing sell orders here creates resistance. There tends to be resistance at former peaks. Something gets really overbought and it gets close to a level that was important resistance or a peak in the past, there's a good chance it's going to reverse. All right. It doesn't need to be rocket science. Levels, trends, momentum. That should be your mantra. What are the important levels? What's the trend? What's the momentum? Now, if we take a look at today's trading, this is a pretty significant reversal. Now, a lot of people kind of overthink the whole thing with reversal patterns, or I think it's more that they really just don't understand them. They think that if this like magical pattern shows up on a chart, something is going to happen. But what's important is to understand the dynamics. Now, I don't know what this is called, if it's called anything. There's probably a candlestick name for it, right? Candlestick charts have been around for 700 years. And what we're looking at is emotion, and people's emotions haven't changed in 700 years. I mean, the technology has, the companies have, the people have. But anyway, the blue team was in charge. Let's just think about it in like a football analogy. So the blue team is bringing the ball up the field here. And then all of a sudden, it looks like they're going to get into the end zone. It looks like there's going to be a breakout. But the red team makes a stand. They make a goal line stand. All of a sudden, the momentum changes. All right. Now, you could even call this a false breakout. But anyway, it's clear the red team has taken over. The fact that we're not giving anything, not rebounding at all in the aftermarket is pretty telling. But what happens sometimes is something looks like it's going to break out. A breakout is when something trades above resistance. Resistance is this large group of sellers. All right. If we trade above it, what does it tell us theoretically? Well, that the sellers are out of the way. They cancel their orders, they finish their orders, whatever. But anytime you take supply out of a market, it sets the stage for a move lower. Now, there was like kind of this last gasp, and this is what we call a false breakout, when it looks like it's going to break out, but it turns around really quickly. And these in and of themselves tend to be good contrarian signals, which sure enough, it was today. The opening was 263 and the close was like 241. So considering the fact that we're not giving anything back in the pre-market, I mean aftermarket, it's probably going to be some more downside. And we know that one of the reasons why we get support is because we have remorseful sellers buying things, trying to buy things back at the same price they sold them at. In other words, you sell something at 15, it goes to 20, and you're like, oh, I made a mistake. I shouldn't have sold. If it ever gets back to 15, I'm going to buy my shares back. Now, when you gap through levels like this here, there's no trading. And when you move through levels really quickly, it's kind of the same thing. There's just not a lot of time for this big vested interest to form of all these remorseful sellers who are going to be trying to buy things back. So it leads to this phenomena that I call, eloquently enough, fast move up, fast move down. So, I mean, where can we see it? Well, that wasn't that fast. One of the other reasons, a reason why we get resistance is because we have remorseful buyers trying to sell things. In other words, someone buys something at 20 and it goes to 15 and they say, I made a mistake. If it gets back to 20, I'm going to sell. So when you gap down like this, you just don't have a lot of time for there to be a lot of buy interest to form. So fast move down, fast move up. I think there's a good chance now we see our fast move up and fast move down. All right. Now, in terms of my price target, I think this thing could give a lot back. I would become interested as a buyer, maybe down around 205, which is down another like 35 bucks. But remember, fast move up, fast move down. There tends to be support at levels that had been resistance before because of seller's remorse. All right, everyone. Hopefully that helps. As trades come, this was a pretty easy one. And that's a big part of trading, is just, having enough patience to wait on the sidelines, to wait for something compelling to come along. Yeah, now, like, this is what I was saying before. If Warren Kitty recommends something, just buy puts right after the open. It's almost like printing